Welcome to TradeTheMBI.com. This is John. This report is for the 27th. Well, I talked about us being in a trading range here when we got into this kind of like lower muck, and we saw improvement from our DOC red. We're still fading on that, so from that standpoint, still weakness abounds. We've gotten some short-term buyers that have held the line, and we're finding support happens at some pretty significantly key levels, and then we break past those and get a continuation from it. So it's consistent with what our expectation was. We're just waiting for a proper reset that has orange dipping all the way down and complete reset. We're starting to get a gold rising at this particular point within this week's setup. It's not particularly great. Usually suggests that we may break lows when that happens. We'll keep an eye on it. Maybe we get a significant orange dip that's able to sustain it. But more often than not, that tends to break down as opposed to trend move that's positive shakeout, and that rising when you have gold coming forward tends to improve. So we'll certainly keep an eye on that. The euro is still not going anywhere given the situation. Europeans selling it, Fed trying to buy it to keep it alive. Still, it's at the bottom side of the range that's safe for what the U.S. is looking for. And oil, still within this general range, is one of those where if you break this low over here, right in about this from the USO, which is the ETF version at 1078, I think it gets problematic. Then you can start questioning whether or not the world economy is still okay in that, and an indication that there's a flight out of regular currencies because of the zero growth. Gold continuing its nice climb. If we shrink that chart, we've been on this from day one, well, at least from this breakout, but even prior to that when it was under 1,000. From a 5K standpoint, well, it was that pre-market dip that we were looking for the open, and started to recover, ended up with our nice little orange cross, which is that setup where you're below negative 13.5, you get at least a 2.25 spread in your yellow above magenta, and you work with it, and if it breaks above that negative 13.5 on the DOC red, you got a shot at something that can, well, take off. And in this particular case, it's interesting because it came up and then it created the little bit of a spread right here, but the DOC red was still able to climb, and so was that magenta shakeout, just kept going, and that's what led to that massive move, which usually means that some of these positive extremes are going to get refilled. And you have that one coming all the way to right here. We'll still have to look for that one at 44. And then some of the higher ones were already filled that took place right around the 60 level. They caught a bid right around there and was able to sustain it and make highs from there. And once we did that, move too far too fast. Get rid of some of those lows. It helps improve the chart for us just a little bit. So we ended up with our series of DOC spreads. The best ones that I like, of course, are where the steel comes from above to below, and has happened within the last 3 or 4 bars. And I think usually I set 5 as a maximum when looking at bigger time frames. So a little more flexibility on a 5K, and then you have green breaking down below, and that happened right over here, which was coincidentally right around the 2870 range. So anytime I got a little bit of a pop there, I was attacking that one, and that did lead to that fill of the earlier positive extremes, just not the full target all the way below, which meant that there was some decent support. And again, that same configuration here where you get the crossover. This time the histogram not below the negative 13.5, but you did catch the DOC red above the 13, and that led to the nice promising rise, particularly off the P2s and the X's. And then you find us in pre-market right now. We're at the peaks post-trade above the 2880, and that again puts us in line to get back to 2,900, and then from there, we're going to be looking at that 2,923 again. And again, also these same areas at 2880, 2870, and a break of that though gets a little bit more perilous as we get to the 47s for returns. So it's one of those, as long as things aren't having monkey wrenches thrown into them, we should still be cruising along because there's no indication that there's a reason for it not to. As always though, trade well and talk again later.